Imagine waking up, checking your bank account, and seeing money deposited while you were sleeping. No alarms. No boss breathing down your neck. Just cash flowing in, on autopilot. Now, picture the opposite. You work 40 hours a week, maybe more. Rent keeps rising. Inflation is eating away at your savings. Retirement? A distant dream. The difference between these two realities? Dividend investing. And here's the thing, you don't need $1 million to start. You just need the right strategy. Stick around, because in the next few minutes, I'm going to show you how to turn the stock market into your personal ATM without gambling or day trading. But be warned, miss out on this, and you might regret it for the rest of your life. Act 1, the setup, why dividend investing is powerful. Let's take a trip back to 2008. The stock market crashes. People panic. Retirement accounts wiped out overnight. But, in the midst of the chaos, some investors, they kept making money. How? They owned dividend-paying stocks. Even when the market crashed, these companies still paid out cash to their shareholders. While others lost everything, dividend investors kept collecting checks. That's the power of passive income. And in this economy, can you really afford not to have an extra stream of cash flow? Let that sink in. Now, let's break down exactly how you can start earning passive income from stocks today. Act 2, the conflict, step-by-step guide. Point number 1, what are dividends and how do they work? Simple, animated breakdown of dividends, with money flowing into an investor's account. First, what are dividends? Think of them as profit-sharing checks companies send to investors. If you own shares of a company like Coca-Cola or McDonald's, they literally pay you, just for holding their stock. Sounds great, right? But not all dividends are created equal. Some companies pay high dividends but are financial disasters waiting to happen. Others barely pay anything but have explosive long-term potential. So, how do you find the best ones? Point number 2, the 3 types of dividend stocks you should know. Picking the wrong dividend stock is like dating someone who promises a lot and delivers nothing. Don't fall for the fakers. There are 3 main types of dividend stocks. 1. Dividend aristocrats. These companies have increased dividends for 25 plus years. Think Johnson & Johnson, Procter & Gamble, and Pepsi. 2. High yield stocks. They pay big dividends but come with higher risk. Example? AT&T, which burned investors when it cut dividends. 3. Dividend growth stocks. They start low but increase payouts over time. This is where the real wealth is built. Want to know which type of investor gets rich? Stick with me. Point number 3, how to spot the best dividend stocks. Key metrics to watch. Buying the wrong dividend stock is like buying a car without checking the engine. It looks good, but it'll leave you stranded. Here's how to avoid that mistake. Dividend yield, DI, the percentage of payout per share. Aim for 2 to 6%, too high is a red flag. Payout ratio, shows if the company can afford to pay dividends. Under 60% is ideal. Dividend growth rate, are they increasing payouts yearly? You want this. Strong financials, revenue growth, low debt, and solid cash flow. Miss these, and your passive income could vanish overnight. But picking the right stock is just step 1. You also need a winning strategy. Point number 4, the dividend snowball effect, how the rich get richer. Did you know that Warren Buffett makes over $4 billion a year from dividends? The secret? He uses the dividend snowball effect. Here's how it works. Instead of spending your dividend income, you reinvest it. That means next time, you earn dividends on a bigger amount. Over time, your wealth explodes, without adding extra money. For example, if you invest $1,000 in a stock with a 5% dividend yield, you get $50 in year 1. Reinvest it, and next year, you earn dividends on $1,050. Fast forward 20 years? That small investment could be paying you thousands per year, on autopilot. This is how small investments turn into financial freedom. But, there's a catch. Act 3, the resolution, executing the strategy. Point number 5, the best way to build a dividend portfolio. Step-by-step plan. If you want to maximize passive income, follow this roadmap. 1. Start with $500 to $1,000, or whatever you can afford. 2. Pick 5 to 10 solid dividend stocks, using the rules we covered. 3. Use a tax-advantaged account like a Roth IRA to keep more of your gains. 4. Reinvest your dividends automatically. 5. Stay consistent and let time do the work. If you do this, your future self will thank you. But the real question is, how fast can you grow your money? How to supercharge your returns. Dividend investing is powerful, but there's one thing that takes it to the next level. It's called compounding. When you combine dividends with compound growth, your wealth skyrockets. It's how small investments turn into millions. Want to know exactly how it works? I break it all down in my last video, The Power of Compounding, how to turn hundreds into millions. Click here to watch, because the sooner you start, the richer your future will be. Most people work for money their entire lives. But the wealthy? They let their money work for them. Right now, you have two choices. 1. Forget this video and keep relying on a paycheck. 2. Start building passive income today, and change your financial future forever. The choice is yours. Now, let's make your money work for you. Thanks for watching. Like, subscribe, share, and press the bell icon.